With that, let's kickstart the show then. And Shreyansi, take us through what's happening on Wall Street. S&P and NASDAQ have seemed to see a slight bit of recovery, but can't say the same for Dow Jones, is it?
Absolutely. Well, largely lackluster moves though, nothing like what we've seen recently for Wall Street. But when I'm looking at futures then tied to the 30 stock Dow, I'm seeing a rise of 0.1% thereabout. S&P 500 futures also gained 0.2%, and NASDAQ futures also gained 0.3%. But when I'm looking at the main trading session then, the Dow slipped 0.1% to post a 3-day negative streak. Meanwhile, when I'm looking at S&P 500 as well as NASDAQ Composite, both of these indices inched up 0.1% and 0.2% respectively. Investors fears that the Federal Reserve may keep rates higher longer weighed on stocks. So Fed Chairman Jerome Powell said that policymakers will need more proof that inflation is moving toward the central bank's 2% target, a target that they talked about time and again, Powell and other officials as well, before rates can come down. More on that later, but in addition, there was also data coming in that companies added 184,000 workers in March according to the ADP. The result trounced Dow Jones' estimate of 155,000 and spurred investors' fears that rates may indeed stay higher longer. Now, when I'm looking at the 10-year Treasury yield then, that briefly topped 4.4% and touched a high for 2024. On the economic front then, investors will be looking to initial jobless claims numbers for the week ending March 30th. And that's, like we've highlighted earlier this week as well, that is a key data set coming in. The US trade deficit as of February will also be released Thursday morning. All eyes are on Friday for the release of March's non-farm payrolls, like I mentioned. And well, let's take a look at Europe then. European bosses ended in the green with Germany's DAX up 0.5%. France's CAC 40 also up 0.3%. So that's the kind of handover that we're seeing coming in. But it's gold that is glittering bright and early this morning, Steve.
Well, absolutely. While equity markets globally are a little dilly-dally, gold is the one that is breaking through and touching record highs for consecutive sessions. Now, back-to-back record highs coming in for gold this week because gold prices have raised to yet another record high yesterday after the Fed Reserve Chair Jerome Powell reiterated that recent readings on job gains and higher than expected inflation do not materially change the overall picture of economic policy this year. Spot gold rose 0.5% to $2,292.3 per ounce after hitting a record high of $2,294.9, which is almost $2,295 per ounce earlier in the session. Investors still expect a first rate cut at the Fed's June 11 to 12 policy meeting. All eyes will definitely be on that meeting. Even a stronger recent economic data has sown investor doubts about the outcome. Now, gold, which is a hedge against inflation and a safe haven during a time of political and economic uncertainty, has climbed over 11% so far only this year. So on a year-to-date basis, just in the last 3 months that we've seen, gold is already up 11%, helped by a strong central bank buying and safe haven as well. But well, those were the moves on gold. Let's shift focus. Let's talk about what's happening in the world of oil, because
if you like this video, then like, share and subscribe to ET Now.